Good afternoon. Jennifer Timm here, real estate wealth advisor with Keller Williams, licensed in both California and Oregon, and so honored to be here with your midweek market brief. So let's get started because, of course, this is where smart money watches the market. Starting with our national outlook, our key market trends and headlines. So mortgage rates dipped to 3-year lows, quite a bit of volatility with mortgage rates. So you'll see some different numbers here. It really depends on when the information was pulled this morning, this afternoon, yesterday, or the day before. So mortgage rates dipped to 3-year lows, 30-year fixed. We have seen it down to 6.06, and 15-year fix is sitting lower than that. And the drop is definitely fueling a wave of activity. Refinance applications are up 40% year over year, and purchase applications are up 16% month over month. So the market is prepping for a strong spring buying season. The inflation is easing, but housing is still sticky. So core CPI is up just 2.6% year over year, which was lower than expected. And housing inflation does remain one of the biggest contributors to that. Because of that, the Fed is unlikely to cut rates before March or later. Oh, let me just go back a little bit. So we've got a couple of things going on, and I apologize. My little thing is getting out of control here. One of the things we want to be aware of at the moment is home sales are surging. So that's really exciting news. Existing home sales are up 5.1% in December, and new home sales are at a 3-year high. And a lot of that has to do with the mortgage rate. It also has to do with the fact, and I didn't include that slide this week, I may do that next week, that we now have more mortgages sitting over that 5%, closer to the 6% for their percentage rate than we do at that lower sort of those 3%. So we're starting to see a change in the direction. So more sellers are finding it more palatable to sell their properties and take on a mortgage, often out of necessity. And so that is producing a little bit more inventory, and it's just kind of getting things going. So that combined with the lower interest rates, we're not sitting at 7s anymore. We're sitting right around that 6% mark, depending on the lender and the borrower, which is definitely encouraging the market to come back. So our median home price is sitting at $405,400, which is flat year over year. So buyer activity, as I said, is rebounding. So the MBS Highway Housing Index rose 7 points in January, and that's an indication of more buyers are looking at getting into the process. Buyer activity and sentiment are noticeably improving. Rent compression continues. So median national rent is $1,689, which is down 0.7% year over year. Rents are falling most in higher end units, while lower end rent affordability remains tight. And this represents 29 straight months of year over year rent declines. So Trump has a couple of items on his housing agenda. He actually made some announcements today, and all I'm doing is presenting the information. And there's a lot of analysis coming out with, some of the proposals, and some could be positive and others may not have any impact at all. So this is kind of a summary of what we're hearing at the moment. Executive order ban on institutional home buyers. This targets large investors in single-family home purchases. Exceptions for built-to-rent communities. The enforcement details and the definition of institutional investor is still unclear. Again, there are those that feel that the percentage of properties that have been purchased or are currently owned by institutional home buyers are not going to make that much of a difference to inventory at a national level. So there we go. Economists doubt it will solve affordability due to small market share of large investors. Proposed GSE action, Fannie and Freddie to buy $200 billion in mortgage bonds, meant to support liquidity and lower rates, and it's too early to tell impact on actual affordability. One of the economists we heard presenting yesterday in our Keller Williams office mentioned that it just may not be enough to make a big difference. Depreciation for homeowners, this is something that he mentioned in a speech today. He floated a possible depreciation tax break for primary residences, which is currently only available to investors. This could open new incentive for home ownership if passed. But again, the headline here is Trump's housing agenda headlines without clarity. A lot of details that have not been disclosed. So we'll wait for the experts to analyze all of these, and we'll bring you any updates as we have them. So one thing to be aware of it is, and I'm sure you've heard this in the news, generational wealth transfer is shaping the market. Gen X and millennials to inherit 4.6 trillion in global real estate. And that's sort of the projection that I've seen is over the next 10 years. 52% of that will be US based. Now, younger buyers are prioritizing lifestyle, function, and value. So they're not necessarily keeping the properties that mom or dad are leaving for them. A lot of them are identifying a different kind of lifestyle, or that's their vision and their dream. So there's a surge in activity in new luxury markets like Nashville, San Diego, and Salt Lake City. So nest investing is a growing trend using real estate as a wealth anchor. So that is something I am very, very aware of, involved in, tracking on a daily basis, and that forms a large business of a large portion of our business is helping with that transfer of wealth, helping parents structure everything together with their legal and financial team to make sure that transfer happens in the best way possible, minimizing taxes as much as we can, and then to help the adult children who are inheriting the properties actually figure out how does this fit into their real estate plan for the future, what the options are, and then helping them along the way to achieve those. So the additional market context of our market right now, this is something I mentioned earlier, mortgage lock-in is easing. More homeowners now have rates above 6%, then below 3%, potentially unlocking inventory in 2026. So it's just starting to happen. Pending sales and buyer demand are trending up across most U.S. regions, and renters and high-end units are staying put, creating a drag on move-up markets. Our mortgage rate for today, and this was as published by Mortgage News Daily. This comes out around about 12 noon, 1 p.m. Eastern Standard Time. So mortgage rates sideways to slightly lower. Markets held more sideways overnight as traders awaited further geopolitical developments today surrounding Greenland. Both stocks and bonds lost ground yesterday on the threat of additional tariffs and counter tariffs, as well as decreased participation in the U.S. bond market from foreign wealth funds. When bonds lose ground, rates move higher. So bond market improvement was tentative earlier in the day, but more noticeable in the afternoon when Trump announced the framework of a deal just after 2:30 p.m. Eastern Standard Time. Both stocks and bonds rallied on the news, and up until that point, mortgage rates were holding right in line with yesterday's latest levels, but some lenders are offering midday improvements this afternoon. So sitting again, and it very much depends on each individual lender, what they are willing to offer. But the sort of standard here is 30-year fix is sitting at 6.2%, 15-year fix 5.76%, and you can see FHA and VA are lower. So the smart money insight. Affordability isn't just about price, it's about access and alignment. With mortgage rates at their lowest in 3 years and buyer sentiment improving, 2026 presents a strategic entry window for home buyers, investors, and move up sellers. But don't wait for clarity on policies. Housing is a long game. Whether you're planning to buy, sell, hold, or inherit, partnering with a real estate wealth advisor ensures you're playing offense, not just defense. Let's review your equity goals and strategy, especially before policies shift again. And absolutely reach out and let's sit down and figure out what your goals are. Lots of things happening, but delaying is not necessarily in your best interest, whether you're selling or buying. Local market insights. So we're starting out with Capistrano Beach. Our market action index has increased slightly to 36, median list price of 3.649 million, down slightly, price per square foot up slightly to 1,103. Currently have 14 homes on the market with a median days on market of 98. So our insight sales are outpacing new inventory and the market action index is rising, a signal that the market may be turning the corner. Prices are still soft, but a rebound could be on the horizon. Buyers eyeing this area may benefit from acting before values begin rising again. And again, if you're looking to buy in the area, with only 14 homes on the market, it's pretty tough. Most of those are higher priced properties. When a more affordable property hits the market, it tends to get attention really fast. So if that's an area that you're interested in purchasing into, let us know, because we need to really be on the ball as far as being totally aware of when properties are coming on the market, and be able to take action the minute they hit the market or before. Moving on to Dana Point, our slight seller's advantage of 36 remains unchanged. Our median list price of just over 6 million is down slightly. Price per square foot, 1,686 is also down slightly. Inventory has gone up. Again, this is all slight movement. 30 homes, median days on market 98. A steady MAI paired with low inventory suggests underlying demand is still solid. Prices are stable now, but persistent activity could drive values up. Smart investors should monitor for early price shifts in luxury segments. San Clemente, slight sellers market of 44, which is up. And median list price is up to 2.45 million. Price per square foot, 925 unchanged. Inventory up to 53 homes with a median days on market of 98. With MAI climbing and demand exceeding supply, San Clemente is gaining traction. Expect continued price pressure upward. Savvy buyers may want to act while inventory is still present. And again, same thing applies. You're looking to buy in a certain part of San Clemente, highly advise that you work with a real estate professional to assist you to be on top of when things are going to hit the market. Real estate agents talk to each other. And so we often know about upcoming inventory, or we get notified the minute that it hits the market if we know we have buyers looking for something specific. San Juan Capistrano, our strong sellers market and the strongest market in the area right now. It's got an MAI of 48, which is down slightly. Median list price 2.774 million unchanged. Price per square foot 782 is up. Inventory up to 30 homes and median days on market is 56. The market is cooling slightly, but still firmly in a strong seller's zone. If the MAI stabilizes or resumes its climb, prices could follow. Watch closely. This is a transitional moment where timing is key. It's just that ocean is the big draw. Watch your feed for posts featuring some market data for some of the other areas that we cover. In our global perspective, and I've kept these the same because this is what we're seeing, and I'll go into some different countries in the upcoming weeks. But international buyers are returning. International buyers, and I asked an economist this question just a couple of hours ago, and again yesterday. We're definitely seeing renewed interest in and the ability to purchase in different areas. So think global, act strategic, and if you are thinking about acquiring or liquidating assets overseas, especially if you're part of that transfer of wealth generation, let's make sure that everything is set up the way that it should be now to ensure that your loved ones who are going to inherit the properties are actually going to have a pleasant experience and not deal with some of the challenges when you haven't set up a real estate plan. And speaking of planning, that's where it's all about right now. As the market is starting to come back, and again, we're not projecting, none of the economists are projecting, totally crazy pre-COVID, demand. We're talking about a more normal balanced market, which is what we need. But it is coming back and it's coming alive. It's part of the seasonality. And we really encourage you to sit down with a real estate wealth advisor like myself. If you're in an area that I don't cover, it would be my honor to introduce you to a real estate wealth advisor that specializes in your area to help you establish your real estate plan now so that you can take action as the market improves. So let's talk strategy. Reach out, and I'd be honored to sit down and work through that with you. And it can be in person, over Zoom, whatever your pleasure. So let's connect. This is the best way of contacting me. And just a quick disclaimer that this information is provided for informational purposes only and should never be construed as investment, tax, or legal advice. I am none of those. We do get our information from very credible sources. It is reliable and it is up to date, pulled the day of, so today. And but definitely past performance of any market result is no assurance of future performance, and you absolutely should consult with your own legal, financial, tax advisor and verify all information before taking action. And we actually work together with your legal and financial team, and we're that collective team together to help you achieve your goals. So thank you so much for joining me. If you have any questions, please don't hesitate to reach out. And if you know of others who have an interest in understanding what's going on in the market in coastal Southern California, please share this with them. I would be honored to have them watching. And with that, I wish you a wonderful hump day evening. We'll see you next week.